Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Shutdown, showdown. The U.S. Senate has voted 60-40 on a procedural measure to advance a bill that could end the longest government shutdown in history. But it's not a done deal yet. Ahmad Al-Sharaa is set to meet U.S. President Donald Trump in Washington later today, making him the first Syrian president to visit the White House since the country's independence in 1946. And President Trump says no U.S. officials will be attending this month's Group of 20 summit in South Africa as he repeats claims the country is mistreating White Afrikaners. We are live in Johannesburg with the latest. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's just take stock of the week we had last week for global markets, specifically actually the U.S. Quite the big drawdown that we got, the S&P ending about 1.6% weaker, the Nasdaq down more than 3%. It's actual weakest week since the Liberation Day week back in April. Just to give you a little bit of context, is how big a pullback that we had last week for the Nasdaq, with names like Oracle losing 9%, Nvidia dropping 7%, Palantir, one of the names also that Michael Burr said that he's shorted, is down 11%. So all of those names were right in the center of the storm. But as you can see this morning, things are looking up. We've got S&P futures up 0.7%, Nasdaq up 1.2%. Not fully recuperating the losses from last week, but perhaps some positivity that maybe this longest shutdown ever in history could be coming to an end. We're going to talk about what happens next in terms of procedure and votes in a short moment. The USD not doing a whole lot this morning, unchanged but slightly firmer. That has been the theme over the last couple of weeks. A bit of support coming through for the greenback. And then gold with, again, more and more of these uncertainties, economic uncertainties, geopolitical uncertainties. We see money coming back in again. We're above $4,000, 4,050 is where we're at, 1.3%. So still not at those record highs we were at, but back once again gaining some support around $4,000. Let's switch over because there's something also going on with the U.S. economy here. And it's unclear whether this is shutdown related, concerns over rising prices, whether it's a potential concern about the weakness in the jobs market. But the University of Michigan sentiment numbers that came through on Friday showed the weakest consumer sentiment since 2022, the weakest in 3 years. So even, yes, we're talking about these global markets and U.S. markets close to all-time record highs, very close to those all-time record highs. Consumer confidence is telling you a very different story. And this perhaps is a reflection of this K-shaped narrative that we've been talking about, where the rich and upper income seem to be thriving. Lower income are concerned about the outlook. So that came through from the University of Michigan sentiment. All right, let's also check in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min, walk us through the price action today.
Hey, Jomana, as you can see, markets really rejoicing the prospect of this end of the U.S. government shutdown, especially the Kospi surging ahead by 3%. A part of it is the Korean government cutting the dividends tax, and also local reports saying that the National Pension Fund is looking to buy more local stocks. But also with Nvidia's Jensen Huang over the weekend in Taiwan visiting TSMC's the sports day there, and he was saying that he wants more wafers from TSMC, and that also helped to alleviate some of the concerns around the frothy valuations when it comes to the tech stocks. So that's helping the Kospi and the HIX and the Nikkei all lifting higher. The Hang Seng as well, up by 0.7%, digesting the tailwind that we got from the macro picture here over the weekend. We had the inflation data coming in better than expected. A positive print that we got in October, 0.2%, reversing the 2 months of deflation that we saw. PPI easing as well, negative 2.1, easing from the previous month of a fall of 2.3%. Some say this is a one-off bounce because of the Golden Week holiday that boosted travel spending. The question is whether this is the start of a longer-term reflationary trend in China. Many economists are still not very optimistic about that.
Just a one-off then. Min Min Lo in Hong Kong, thank you so much. Now, the U.S. Senate took a major step towards reopening the government after a group of moderate Democrats broke with their party leaders and voted to support a deal to end the record-breaking shutdown. Bloomberg managing editor Jill Dees joins us from Hong Kong. So a short while ago, Jill, we saw this procedural vote pass through the Senate. But of course, this is just the first stage of a couple of more votes that have to take place in order to end the shutdown. Walk us through what happens next from here.
Yes, that's right, Jumana. So at this point, the Senate has voted in this procedural test vote, 60-40 on this resolution here. Ultimately, what they're looking at is a deal that would extend sort of a budget for some federal agencies, including Veterans Affairs, Congress itself, as well as the Department of Agriculture, would also agree to fund the rest of the government, other government agencies through January 30th. There's a few other provisions that are key in there. Now, of course, while this is a step toward ending what has been the longest U.S. government shutdown, it doesn't necessarily mean that everything is just going to pass through smooth sailing from here. At this point, what we'd next expect is for this full Senate to sit down and have a formal vote, perhaps sometimes on Monday. They've certainly adjourned until then, so we're not expecting any more action tonight. So that's the next step that could ultimately take place here. Now, the important thing to keep in mind with this next step, Jumana, is that if any senator, for any reason whatsoever, wants to sort of delay this for any kind of procedural reason, that could ultimately delay the time that it ultimately takes. That could take days to resolve. So that's the next thing that we're looking out for. And then, of course, a resolution would have to pass through the House of Representatives as well. So again, like several steps that we're ultimately looking for here could take some time to resolve, but it does seem like they're at least on track to eventually end the shutdown.
Well, maybe I'm jumping ahead, but I think, for investors, what's relevant as well is what is going to happen with all of the backlog of data releases. We've got 2 outstanding jobs report. We've got a CPI report as well to watch out for. Do we know what happens to the data? They're going to release everything in one go, or what's happened in the past?
I mean, that's a great question, Jumana. I think, just given the length of this shutdown, really tough to tell how much that's ultimately going to affect it in terms of, sort of the cadence by which we're going to eventually see all of those data releases. I would say that for now, we're really just waiting to see how quickly this ultimately gets resolved, just because of all of those potential hitches that could happen before they ultimately vote to sort of end this. So I think the next thing that we need to look out for is whether this is ultimately resolved in a matter of, a couple of days, if it takes until the end of the week. And then I think we can start to see, maybe some more finer details in terms of what that release cadence looks like for all of those data points that we're really looking out for.
Yeah, well, I was reading this morning, the shutdown consequences are costing the U.S. economy about $15 billion a week. So the numbers are certainly beginning to mount. Managing Editor Jill Desus, thank you so much. Joining me now is Charu Chanana, Chief Investment Strategist at SAXO. Chana, really good to have you with us. Let me start off by asking about your thoughts on the potential end to the shutdown, though, of course, still a lot of hurdles, obstacles to get through in order for this to actually be complete. Do you think it's beginning to have an impact now on investor sentiment in the market?
Hi, Jumana. Thanks for having me back. Looking at how the U.S. futures are trading this morning, how Asia has opened up, it does give me a sense that the sell-off that we saw last week, it was in a big way, of course, driven by concerns around AI bubble, but also I think these U.S. shutdown concerns played a key part there, especially as we crossed that 35-day mark and made it, the longest shutdown in history. I think that has obviously weighed on sentiment. And given that we are making some progress today, I think the sentiment has been one of relief. And we've seen that in the market reaction as well. Of course, we just talked about the prolonged uncertainty that we still face from here. And that kind of brings the question as to how far can we go in kind of, getting this rally, working along. And then once we get through this uncertainty, the next 2 questions that are on my mind, particularly from here on, would be what kind of negotiations have been done. We've been hearing that the Obamacare subsidies is one of the talking points there. And if that is the case, then what does it mean for the healthcare spending that was to be curbed and for the fiscal, dynamics in the U.S.? And I think that's potentially what we are seeing in the gold trade today. So that's very important. And then the flood of U.S. macro data that starts to come in, whether or not we get closer to pricing in, even more confidently that December rate cut from the Fed.
Yeah, it's a really good point, because some of the measures in that procedural vote would require another, extension on funding on January the 30th. So we might be back where we are again in a couple of months' time. But Chair, I want to bring you back to something else that I mentioned at the top of the show, which is that there's increasingly seems to be a dislocation between what Wall Street is telling us versus what Main Street. You look at the University of Michigan sentiment indicators, the lowest level in 3 years. Do you worry about this divergence between all of the hype and money that's going into Mag 7 and the stocks that are leading the rally versus actually what's happening on the ground and real insecurity around job prospects and still faced with sticky inflation?
I mean, you very rightly, Jomana, at that time mentioned about the K-shaped economy, and that's very much taking shape. And I think that's also one of the reasons why, we start to worry about the AI bubble. There are pockets of this AI story that has been carrying the US markets in such a big way, where there are signs of monetization. Now, the question is that monetization enough, compared to what the big companies have been investing? But it certainly puts us in a more comfortable space compared to the dot-com era, where there was a lot of money being thrown into extremely unprofitable, names that had no, output and no, reasons to get to productivity and profits as well. So those kind of reasons give us some more comfort around the AI bubble. But certainly there's a lot of froth, and there is a section of the economy that is not able to cope up with the pressures of, say, sticky inflation. So I think there's really two sides of the story. So far, what we've seen this year is the better part of the story has been governing the markets. And from here on, I think it just gets more volatile as we start to see more and more of that part that is suffering coming out. I think probably getting bigger or getting impacted in a bigger way. That starts to weigh on the market sentiment as well. And I think the path from here is looking like is a lot more volatile in that sense.
What about credit concerns? A few weeks ago, we were talking about that in the U.S. economy. It seems like everyone's just moved away from it. And we understand, having spoken to many of the industry leaders and even the banks themselves that had exposure to those specific companies, have brushed those concerns as sort of a one-off. But do you, again, think and look at the rise in non-bank lending that's going on in the U.S. economy and think maybe at some point in the future we could have an underwriting problem? This could actually evolve into a more material credit issue.
So absolutely. When we first started this earnings season with the banking sector coming out with earnings, we were all talking about credit cockroaches. And it seems like someone's just kind of sprayed, a chemical on them, and it's been really put to rest for now. But that's something that's brewing in the background. That's, again, I think, very much a signal of a part of the economy doing well, but a part of the economy still suffering in a big way. And I think what we hear from the retailers coming out this week would be particularly important, not just in terms of what they expect from the consumer and the pricing, but also as we are heading into that retail season, the shopping season, the Christmas season, what their outlook is. Do we expect year-on-year growth of what magnitude there? I think that will give us some more signals, but eventually I think this problem is certainly somewhere which is hiding in the background right now, and it might come to limelight as that K-shaped recovery starts to diverge a lot more as well.
Charu, so good to have you on. Thank you so much. Charu Chanana, Chief Investment Strategist at SAXO. Well, coming up, Syria's President Ahmad Al-Sharaa is set to meet U.S. President Donald Trump for unprecedented talks at the White House today. We'll discuss that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Syria's President Ahmad Al-Sharaa is set to meet U.S. President Donald Trump at the White House today. The unprecedented talks come just days after Washington removed him from a terrorism blacklist. Joining us now is Paul Wallace, Bloomberg's managing editor for economy and government news in the Middle East and Africa. Paul, my social media was awash with images of Ahmad Al-Sharaa playing basketball with senior U.S. military commanders over the weekend. Presumably, he's not in D.C. just to play basketball.
You never know.
You never know. What is at stake for the president?
I think there's quite a lot at stake here for President Ahmad Al-Sharaa. This will be the third time he's met Donald Trump ever, but since he took power with the downfall of the Assad regime in December last year, and the first time that he will have gone to Washington for essentially what's a state visit. So this is a further sign of him trying to sort of move Syria forward, rehabilitate it, move it back into the sort of global arena, and very much show that America is a crucial part of that. He seems, Al-Sharaa seems to have a close rapport with Donald Trump himself, which is, I think, something he sees as crucial. What Syria needs a lot of is the removal of more sanctions on the country, because many remain, even American sanctions, and it needs a lot of foreign funding, either aid or foreign direct investment.
And again, that you're referring to the Caesar Act, and one of that needs congressional approval. But I want to ask you about the broader regional angle, because last week we reported that Kazakhstan were set to join the Abraham Accords, and we know that U.S. is really doing a lot to bring Syria into the fold. How much of that is leading towards perhaps more talks and potential normalization between Israel and Syria?
That's probably something that's going to be on the agenda. The U.S., as you say, is pushing it hard. In a perfect world, I think the U.S. would have Syria join the Abraham Accords and formally recognize Israel in the not-too-distant future. But from all our reporting, that seems unlikely. However, there are talks, have been talks going on between Israeli and Syrian officials in Paris for several months, and it seems as if what's potentially possible in the near term is a sort of non-aggression pact. It wouldn't be full normalization. It wouldn't be Syria joining the Abraham Accords, but it will be essentially the two sides agreeing to sort of to end hostilities against each other. Many problems with this. There are issues over the Golan Heights, which there's no way that Israel will give up. It would be extremely difficult politically for Al-Sharaa to accept that as part of a deal. Also, Israel has wanted well, ever since Assad was toppled, really, a demilitarized zone in southwest Syria near the Israeli border. Again, that is something that's going to be extremely difficult for Al-Sharaa to accept.
Yeah, still a lot of hurdles then. Paul, thank you so much. We'll keep an eye out on President Sharaa's visit to D.C. later today. Apparently, they're meeting at 11 a.m. Eastern Time. Bloomberg's Paul Wallace, thank you. Now, for a look at some of the other stories we're following. Around 200 Hamas fighters are holed up in an Israeli-held area of the Gaza Strip as they defy calls to surrender. The Israeli army says dozens of gunmen remain in the Rafah area, where a network of Hamas tunnels still exists. Meanwhile, Hamas says Israel bears full responsibility for the confrontation taking place in Rafah. This latest fighting is now casting doubts on the implementation of U.S. President Donald Trump's peace plan. Coming up, President Trump says no U.S. officials will be attending the G20 summit in South Africa. We have the latest on the escalating spat next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. U.S. President Donald Trump has said that no U.S. officials will attend this month's Group of 20 summit in South Africa. It is the latest escalation in a rift that erupted over Trump's allegations that the African nation is mistreating white Afrikaners. For more, our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. So President Trump once again sending this very unhelpful message towards South Africa. How is Pretoria responding?
That's right, Jumana. This really is more or less a continuation of what we've heard from President Trump over the past few months. But seemingly it takes some of the rhetoric that we have been hearing from the White House a step further, especially coming just days before this summit is expected to start. And so I just want to give you a bit of context as to what we have initially heard from Trump and then follow up with more of his comments. Take a listen to what we just heard.
You know, I'm not going to, we have a G20 meeting in South Africa. South Africa shouldn't even be in the Gs anymore because what's happened there is bad. I'm not going. I told him I'm not going. I'm not going to represent our country there.
So that just a few days ago, Jumana, and as you can hear there, President Trump seemingly trying to at least dig his heels in from some of the rhetoric that we've been hearing over the past few months. And as you know, we were just showing there, President Ramaphosa of South Africa took a trip earlier this year after some of these allegations about a white genocide from the Trump administration started to be purported and talked about quite extensively, trying to quell some of the concerns that are and have been coming from the White House House, potentially in an effort to get to the summit, which is just a few days away, and see a U.S. delegation. But now it's not only the president that is not going to be attending the summit, seemingly. We are now not expecting even Vice President J.D. Vance, who a few days ago was expected to attend, as well as some official U.S. people here in the country. So, you know, if we talk about what we're hearing from Pretoria at this point in time, they're seemingly unfazed about this latest comment. Specifically, we heard from Minister Ronald Lamola, who oversees the international relations and cooperation, and he called Trump's post regrettable, in particular adding that the claim that Afrikaners face persecution is not substantiated by fact, and going so far as to cite actual crime statistics, which demonstrates that crime actually affects all South Africans. So again, it's seeming like Pretoria unfazed, just a few days ahead of G20, and hoping that just the omission of one nation, the U.S., of course, is not going to derail any sort of efforts that the rest of these countries are hoping to reach a resolution by the end of the G20 about some of the global challenges that they see moving forward.
And of course, this was meant to be South Africa's big moment on the global stage, hosting the G20. The fact that the U.S. are not coming is very disappointing to them. Is it going to have an impact on South Africa's own policy decisions? And we know that we've been talking about this a lot. You know, there is a lot of incentive to encourage reforms, to find new trading partners. How does the situation with President Trump affect all of that?
Well, and Jumana, that's a good point you make there, because South Africa sees this summit not only as an important moment for the country, but also for the global South and for the continent more broadly. And what's been interesting to hear from Pretoria is that they see this direction and sort of these allegations coming from the White House being part of the whole changing of the international order that we're seeing here. But if we take a look at policy in particular, something that's been quite interesting, not only have we seen the U.S. stance on migration changing domestically, we also recently saw that the White House actually changed their stance on refugees. So with former President Biden, there were about 125,000 refugees that were able to be admitted into the U.S. With President Trump just a few weeks ago, he brought that number down to about to a 94% decrease to about 7,500 for the fiscal year of 2026. Not just that, prioritizing white South Africans, that even coming despite many refugees who do come from war-torn areas. So quite a bit of policy changes internationally, but also domestically from the U.S.
Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg. Well, coming up, we speak to the CFO of regional delivery platform Talabat about the third quarter profit jump year on year. We'll also discuss competition and the trajectory post-IPO. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Shutdown, showdown. The U.S. Senate has voted 60-40 on a procedural measure to advance a bill that could end the longest government shutdown in history. But it's not a done deal yet. Nvidia CEO Jensen Huang asked TSMC to boost production even more, citing strong demand for AI chips. And we speak to Khaled Al-Fakesh, Talabat CFO, as the company reports its third quarter earnings and maintains guidance for the full year. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Pullback for U.S. equity markets last week. We had the worst week for the Nasdaq since Liberation Week back in April, with a pullback of more than 3%. The S&P ending the week 1.6% lower. Some of the names in that basket, like Oracle, Nvidia, Palantir, all of them getting hit anything between 9 to 11%. So a heavy week last week, but today things are looking up, possibly on some optimism around the potential end of the U.S. shutdown with that procedural vote going in favor of an end of the shutdown, but still many other hurdles that need to get through in addition to the full Congress approving on the end of the shutdown as well. So we're moving in the right direction, but not actually there yet. S&P futures up 0.7%, NASDAQ up 1.3%, with most of the big tech earnings behind us now. But again, we're still very thick in earnings season with other parts of the market reporting. So keep an eye on that to see whether there could be a broadening of some of this risk on that we've seen over the last couple of months. USD not doing a whole lot, though, slipping a little bit, but basically trading flat today. The theme has been one of stabilization for the USD. And then the gold, 4,060 is where we're at, 1.5% firmer. Today is a day where you are seeing money go back into gold again, not just because of geopolitical uncertainty, but again, economic uncertainty. And speaking of that, let's switch over. I do want to highlight a piece of data that came out on Friday from the University of Michigan showing that consumer sentiment is now at a 3-year low, the lowest level since 2022. A lot of that, you could say, is on back of shutdown, but then also insecurity over jobs and perhaps the fact that inflation continues to be quite sticky in the U.S. as well. So that's hurting consumer sentiment, something to watch as we think about the evolution of the U.S. economy in coming months. Now, China's consumer prices unexpectedly rose in October as holidays during the month boosted travel, food, and transport demands. Let's bring in our China correspondent, Min Lo. So a bit of a surprise to the market that you saw this positive data print, especially because we've been talking about deflation in China for so long. Are people looking through this as a one-off, or could it be the start, perhaps, of more positive CPI prints?
Well, a lot of economists are saying it's a one-off bounce because of the Golden Week holiday, which was one day longer than usual, and that boosted the travel spending that we saw, right? And you can see CPI turning positive 0.2%, a bounce compared to the previous month, a fall of 0.3% the previous month. PPI as well, easing, declining by 2.1%. The previous month was a steeper decline of 2.3%. But you pull out and look at the broader data over the year, most of the year we saw CPI hovering around 0 or sub-zero levels, and the PPI was in negative for about 2 years and 10 months now. So it's been a very entrenched deflationary trend. What's positive is the core CPI, stripping away the volatile energy and food prices. It's coming in at 1.2%. This is the 6th consecutive month of positive number there. So that's an encouraging sign. But still, our Bloomberg economics team, Eric Ju, our economist, is saying that the earliest we could see PPI turning positive would possibly be in middle of next year. He's saying that this is, a one-off holiday boost that is going to fade. And of course, a lot more needs to be done when it comes to that anti-involution push, expectation that perhaps the government needs to be a lot more forceful in the way they enforce the rules around fair price competition among companies.
Yeah. And Bloomberg also did its own analysis of China's price data over the past couple of years. So what were the findings?
Yes, and this is a topic of today's Big Take. You can read it on the terminal, a really interesting piece because it provides much more granular data than what the official CPI numbers tell you. So you flip the board, you can see that Bloomberg has tracked about 67 products over the past 2 years, and we saw 51 of them saw price declines, some of them huge declines, double-digit declines, down 31% for things like pears, BYD cars, down by 27%, things like Baijiu, that's a Chinese liquor, eggs, eggplants. These are things that you find in your kitchen, right? And they're down by double digits. You flip the board, you take a look at some of the other categories. Home appliance, this was the standout sector in Chinese retail sales this year because of government subsidies. And yet, we still see moderate declines, down 8% for microwaves, 4% lower for washing machines and fridges. Where we're seeing inflation, though, is in the services sector. Here is where you see attraction tickets, for example, up by 0.4%, 3-star hotel rates, kindergarten fees, seeing moderate inflation here. So the price changes pretty uneven across the board, but clearly taking an impact, especially when it comes to corporate profits. The first half of this year, Chinese listed firms clocking losses were about more than 25%. That's the highest in a quarter of a century.
Wow, yeah, and some of those drops are quite big. Bloomberg's China correspondent, Min Lo, thank you so much for breaking it down for us. Well, delivery platform Talabat has reported third quarter adjusted profit of $112 million. That's a jump from $98 million in the same period last year. The company is maintaining its full year guidance after raising it last quarter. However, it's not all rosy for the platform. as it recently lost its CEO and is facing pressure from rival Meituan. Since listing in December 2024, the stock has steadily tumbled. For more, joining us is Khaled Al-Fakesh, CFO of Talabat. Let's start with the numbers. Are you pleased with the results for the quarter? Do you think you have good momentum into the end of the year?
Yeah, first of all, thanks for having me and good morning. Yeah, absolutely. I mean, we continue growing fast, 27% growth on year-over-year basis. And also we're growing profitably and with the disciplined capital allocation. So we've already, the board approved the interim dividends and for the H1 results, equivalent to $202 million. So overall, yeah, the strong momentum continues to...
Yeah, and maintaining guidance for the end of the year.
We actually revised guidance upwards. So we revised the guidance for the full year. We're expecting to have 27 to 29% growth for the full year and maintaining healthy profitability margin, 6.5% adjusted EBITDA margin and close to 5% net income margin as well.
Yeah. The last time I spoke to Talabat, I spoke to your now former CEO, and I think many investors are probably asking why he left. Can you give us some more color on what happened?
Yeah. Absolutely. First of all, I think personally, and I think the team, we were really lucky to work under the leadership of Tommaso. It's been a great 6 years. And if you look at all the business metrics, it's been going fantastic. It's just a mutual agreement between him and the board. I think the positive side is that we would continue to have access to his knowledge. He remains on the board of directors of Talabat. So we'll keep interacting with him, get his insights on the strategic of the company. And I think also, on the positive side, Ton, who's the newly appointed CEO, is not a strange face for us. We also worked with Ton for 4 to 5 years. In fact, he was the chief operating officer where we worked together under the leadership of Tommaso also to build the foundation of Talabat.
Yeah, how much of it was perhaps performance linked and the fact that Talabat stock, as I just was saying in my introduction, is down about 36% this year in a year where your peers are actually outperforming?
Yeah. I mean, if you look at the market, unfortunately, we understand the frustration from investors. It's been, as you said, also it's been a tough week in general.
Yeah.
But I think if you look at the business performance, we were growing at 30%. Profitability is there. We would continue to see also expansion and strengthening our core value proposition for the consumer. So if you look at the business, Jumana, basically, if you look at all the metrics, when it comes to acquisitions, the acquisition is growing fast. We are already at 7.5 million monthly active customers. That's more than 20% growth on year-over-year basis. Engagements also is growing. Frequency is up. We are at 6.8 order per month. If you look at also the key pillar of the strategy, the selection, which is, let's say, the content and what the consumers see, improving 20% on year-over-year basis. Same for multi-verticality, same for the subscription program. So I would say, no, the performance has been doing really well.
And you are getting a lot more competition in this space with Meituan, the rival Kita. I'm just wondering how you keep your edge. What is it about the Talabat offering that's going to differ yourself from the competition?
Absolutely. No, this space is definitely interesting. Lots of competition. I would say competition is not new to us, but it is definitely, it's more intense now. I think the way we look at it is just simple. We are the market leader. We are the leader since more than 5-6 years. We've been in this business for 20 years. So the way we look at it is that we want to make sure that we continue having this leadership position on the long run. We will continue investing strategically in the business into the key pillar that I just mentioned. It's all about making sure that the value proposition for the customers is better. So selection, experience, and affordability, and building this ecosystem around it. So we believe it might be a noisy period, 12 to 18 months for sure. But we have strong belief that we will continue investing.
Yeah, what do you think is the most important factor for your customers? Is it the choice that's available on your platform? Is it delivery time? Is it ease of access? Is it cost? You know, what is it that they're looking for?
It's absolutely the three. I mean, it's just simple. It all starts with selection or content. Today we have the largest selection. We have 80,000 partners on the platform. So in simple terms, if you're craving for a product or if you want to enjoy a certain brand or certain meals, if you don't find it, you don't interact, right? So selection is key. Number two, we deal with 24/7. So think about it. We are a consumer-facing brand 24/7 dealing with hungry customers, right? So we want to make sure that the experience is always up to expectations. So experience is very important. And lastly, of course, do we have value on the platform? If you look at the last 12 months, our partners actually invested in deals that is translated to consumer with more than $500 million already.
Yeah.
So the three key pillars is definitely important.
And where does fintech come into all of this?
Yeah, fintech is part of the ecosystem, I would say. So we're trying to not be just a delivery platform per se. We want to make sure that we create an ecosystem around it. So we transitioned into multi-verticality. We are doing the subscription program, and fintech is part of this ecosystem. Today, we have two products. Basically, we have the co-branded card. We just launched another co-branded card in Egypt with the partnership of CIB. And we have our own postpaid products in UAE, and also we are launching it in Egypt as well. So it's just simply to create more reasons, more value for consumers to remain stick to our platform.
Yeah, Khaled, thank you so much.
Thank you
a pleasure to chat to you today on the day of their earnings. Khaled Al-Fakesh, Talabat CFO. Now for a look at some of the other stories we're following. Dubai has been ranked the most accommodating location for the world's rich in new research from Savills. The real estate broker said high net worth individuals were attracted to Dubai due to tax advantages as well as strong family infrastructure and high levels of security. Egypt's foreign currency reserves have risen to over $50 billion, their highest ever level, according to data compiled by Bloomberg. Egypt's reserves have been rising since the final quarter of 2022 as authorities began to tackle blows to the economy caused by issues including the COVID-19 pandemic and the knock-on effects of Russia's invasion of Ukraine. S&P Global Ratings has revised Israel's outlook to stable from negative after the country began a ceasefire with Hamas. Israel's A credit rating has been affirmed, with S&P stating the ceasefire could reduce tensions and soften pressure on Israel's economy. The agency added Israel will continue to face geopolitical risks, but the suspension of military activity will support the recovery of the country's economy. And coming up, Nvidia is asking TSMC to boost production even more. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Nvidia CEO Jensen Huang says he's asked TSMC for more chip supplies to keep up with booming AI demand. Speaking at a TSMC event in Taiwan, Huang says Nvidia's AI memory chip suppliers have scaled up capacity to support the company. Let's bring in our Asia Tech correspondent, Animal Jewelers. Jensen Huang in Taipei. What more does he have to say?
Yeah, I mean, he's been very busy. I think that's the third trip he's made to Taiwan, Jensen Huang, in just a matter of months. So clearly TSMC is very much on his radar. But it was the TSMC annual sports day. This is an event that Jensen Huang doesn't always attend, but he was there over the weekend. And speaking about AI demand, and it's a really important point to be getting any sort of commentary on this, given you saw that concern around AI demand and the AI bubble really playing into tech stocks generally over last week. But what Jensen Huang said is that he's actually asked TSMC for more wafers, more chip supplies really in aggregate, but that AI demand is remaining strong. And he didn't just reference TSMC, he actually referenced some of the memory chip plays, the likes of Samsung, SK Hynix as well, and said that they've all scaled up tremendous capacity to try and support the company. You can see, or you just saw that the TSMC CEO, CC Wei, there on stage. So CC Wei, I mean, he last spoke about this capacity issue in October during the earnings, but what he said at that point was really it's not the demand side, it's more the supply side and how much they can meet the demand, given they've also got their own capacity constraints and they're continually trying to scale up production. Oh, just on that note, actually, sorry, I should mention the monthly sales figures. I know we discussed this just now in the ad break, but TSMC did just report its monthly sales figures. Just to remind people, this is sort of a quirk of the Taiwan Stock Exchange that companies that are listed need to report their monthly sales figures for October. So this is the first month, of course, of the fourth quarter, so just the initial reading. But we did see revenue rising 11% on the month, 17% on the year. So at this point, you could call it really a sort of micro indicator of, again, that demand remaining robust.
Yeah. The perils of having a chat in the break when viewers can't see what we're discussing. We were actually talking about those sales figures from TSMC. Thank you for bringing that up. Belle, but look, it is going to be a really big week for some of these Chinese tech companies because we're heading into earnings week there. We just finished with the Max 7 in the U.S. What should we be watching out for this week for some of these big tech names?
Yeah, it's going to be, again, as you said, China tech. I mean, there's really two key names that stand out in this space particularly, but Tencent is definitely one of them. So Tencent, has a really deep pool of customer data. They are the owners of the chat there, that's sort of the WhatsApp equivalent, but that's WeChat, and it's huge. And so you have that huge trove of data in turn. So Tencent is really, I mean, at least around Bloomberg intelligence team, but they're saying that they're in a lot better position to dominate AI in China than the initial front runner in this space, which is Baidu. So you've got that company still in the China tech space. JD.com is definitely going to be a name to track in the midpoint of the week. But JD, this is more on the food delivery wars. If you've tracked those at all, it's really between JD, Alibaba and Meituan. It's a sort of race at the bottom you see on that front. And still in the AI theme, shifting back to SoftBank over in Tokyo, because you've got the Vision Fund. And not only do they have ARM, that's the publicly listed company, the chip designer, but on the private front, I mean, their biggest bet right now is OpenAI, and more than $30 billion poured into that company directly.
Yeah. Lots to watch out for. On the food delivery front, we were just speaking to Talabat over here, and actually, one of their biggest challenges to contend with is the arrival of Meituan into the region as well. So there's competition, even locally as well. Belle, thank you so much. Really good to have you on the show. Annabelle Jewelers, Bloomberg's Asia Tech correspondent. Now for a look at some of the other stories we're following. U.S. Treasury Secretary Scott Bessent says President Trump's suggestion of a tariff dividend could come via the tax cuts in his signature economic policy bill. Bessent made the statement on ABC News when asked about Trump's social media post, where the president said each American would receive a dividend of at least $2,000 from import duties. The BBC's Director General, Tim Davie, is resigning amid allegations the broadcaster misled viewers by editing President Donald Trump's remarks in a Panorama documentary. News Chief Deborah Turness has also resigned, and the BBC is expected to apologize for the misleading video later today. The documentary made Trump appear to say that his supporters should, quote, walk down to the Capitol and fight like hell, when in fact, he said, they should cheer on our brave senators and congressmen and women, while the fight like hell remark was from a different part of the speech. Coming up, luxury and telcos in focus. We take a look at the key names reporting this week in Europe. That's happening next, and this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Let's turn to the earnings we're expecting this week in Europe, and we have a number of key names on the docket. Our equities reporter, Chloe Melly, joins us now. Chloe, let's start with luxury. LVMH, Kering, pointing to a rebound. Are we expecting the same from Richemont and Burberry this week?
Well, those two earnings that we've got this week will really be a real test of whether that luxury rebound is actually happening and is true across the board. So if we start with Burberry, for example, there's actually quite a lot of parallels with Kering. That's both companies that have struggled a little bit and are now ongoing a turnaround under a new CEO. That seems to be starting to pay off. So Burberry retail sales are expected to turn positive for this quarter after 7 consecutive quarters of decline. And analysts are saying that the turnaround is going in the right direction, even though they are at the very beginning of that road to recovery. And for Richemont, the expectation is for the jewelry segment, which includes Cartier and Van Cleef, to do really well and to be able to offset some of the weakness in other parts of the business and some of the challenges facing Richemont, which include tariffs and then inflation in precious metals and currency fluctuations as well. The watchmaking segment could be a little bit weaker, has been a little bit weaker because of muted consumer sentiment, but there's expectation of perhaps a pickup in China, which is also what LVMH had said. So there's an echo there as well. But overall, there seems to be a little bit of resilience in that luxury sector that we should be expecting this week.
Yeah, broadening it out, and obviously, there are so many different companies, different sectors reporting. But what would you say are some of the key themes investors are going to be watching out for?
Well, telecoms is going to be quite an important one this week. We had Vodacom reporting this morning, quite strong results. Later on this week, we've got Vodafone and Deutsche Telekom. The key theme here is around price competition, price rivalry. And then for Deutsche Telekom in particular, the exposure to digital infrastructure will be quite important after its deal with Nvidia for a data center. And then related to that, we also have some updates around the chip making sector with Infineon reporting as well later this week. The expectation is for that company to to provide quite a conservative forecast for next year because of that continued weakness in the auto end market. So that's what we'll be looking at. This is also what other companies within that sector have already flagged.
Chloe, thank you so much. Equities reporter Chloe Melly in London for a lookout on what to watch out for this week at European earnings. Jeff Bezos' Blue Origin has postponed a planned second flight of its New Glenn rocket due to weather conditions and unspecified ground equipment issues. Blue Origin aims to send 2 spacecraft on a trajectory towards Mars for New Glenn's first NASA mission. And let's take a look at how some of these markets are faring, because we are starting off in the green. So a bit of a break from some of the price action we had last week. Throughout the course of the week, we had the S&P close down 1.6% weaker, the Nasdaq down more than 3%. It's the worst week since Liberation Day. But today, things are looking up with both of those indices pointing to open in the green, and perhaps because some optimism is coming through around a potential end to that U.S. shutdown, the longest U.S. shutdown in history. A procedural vote went through a couple of hours ago, suggesting that some Democrats and perhaps center-leaning Democrats are signing on to a vote to end the shutdown. So that is reflecting in market sentiment this morning. We have European markets also seen opening up in very positive territory, up 1.5%. But let's switch over and take a look at U.S. Treasuries as well. And this is the picture right now. We have 2-year yields trading at 3.6. And again, when we think about the next Fed meeting, the December meeting, it is a bit of a coin toss at this point, with the markets unsure whether they're going to go for another interest rate cut. 10-year yields back at 4.14. So we are holding in at around these levels. We've moved up about 4 basis points throughout the course of trading today. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.